Good morning, good afternoon, good evening, greetings from wherever you are around the world. I wanted to make a market review video of how the week has progressed since we have the data now for Monday and can to some degree allow us to determine the direction for the rest of the week. As we always do, let's start off with the dollar index. So yesterday we tapped into the daily buy-side imbalance that we were looking at as a possible area for an entry for higher prices, and not only did we tap into the buy-side imbalance, we actually reached the consequent encroachment of this buy-side imbalance, the 50% mark, which is residing over there. And this rejection of this level is already giving me confirmation that we may possibly see higher prices from here, and a little bit of confidence that we won't see lower prices below the buy-side imbalance. Moving to the euro dollar, of course we have the exact opposite structure with a slight difference. On the euro dollar, you can see that we did not exactly reach the consequent encroachment of this sell-side imbalance, this CB. We did not quite get there. And while we're here, actually, my possible trade of the day and the rest of the week, if I also trade the euro dollar, would be to set a pending order that will sell off exactly at yesterday's high, because I believe we might get somewhat of a Judas swing, a turtle soup, or whatever you'd wanna call it, as we sweep yesterday's high. So this is the previous day high, right, which is also inside this 1 hour sell side imbalance. So I believe what's going to happen now is we'll sweep the high as we are tapping inside of this imbalance. We may then be able to fall off from there, taking the lows. So this would be an ideal trade idea for the week. And what would be my invalidation point? Going back to the daily chart, the same way that I was looking at the dollar index, my invalidation point in this case would essentially be this candlestick's high, because last week we've already respected this sell side imbalance perfectly and rejected away from it with no reason for us to go back into it again. Of course, market makers has tendencies of going back to certain levels, which is very possible for us to go back there. There's nothing stopping them from taking price up there, but ideally I would not like to see us go above this high on the 13th of September. So that will be my invalidation point. Once we've taken this high and more especially closed above it, I don't think I'll be holding the trade anymore. And speaking of invalidation points, let's move on to gold. With gold, I had a pending order to sell off as soon as we swept Friday's high and Monday's high from the 11th of September, because we are inside of this sell side imbalance. And I think I was looking at the 9-hour chart. Yes, I was looking at this 9-hour chart, sell side imbalance. I saw the high. I took this as a turtle soup into an inefficiency and fall off from there. What I didn't like and what I didn't want to see was a closure on the daily chart, because I have it at the back of my head that once we've closed above a swing high, which this structure is, we've got a high where to the left of it there's a lower high, and to the right of it there's a lower high. This makes this point a swing high. And as I've already said in my previous videos, once we've closed above a swing high or below a swing low, depending on the context, I may consider that a market structure shift. So in a way, this right now could be considered a valid market structure shift to take price higher. So I am looking to terminate this trade. My invalidation point, of course, was the swing high, as I've already highlighted, but I might terminate the trade way earlier, because going back to the 9-hour chart, I'll be paying very close attention to this order block, to this bullish order block, watching to see how we trade below this candle. Basically, if I see signatures on a lower time frame that might indicate higher prices from there, I will definitely terminate the trade or move my stop loss from that point to way below break even, because this was my entry. So I'll move my stop loss to this point. So if the price was ever to go higher and try to create a new high, I'll be out of the trade without concerns. So that's my trade idea on gold and why I was hinting on invalidation points. Going to GBPUSD, of course, we do not have the same sell side inefficiency, sell side imbalance, I mean, on a daily chart. So I had to look at true openings to assist me with my entries, especially from yesterday. But let's go down quickly to the 1-hour chart. And let me erase all of this first. On the 9-hour chart for GBPUSD, I get the feeling that we may not essentially make a new high of week. I was specifically looking at this order block yesterday, and I got an entry exactly when we tapped into it, which also made the high of day yesterday, and started rejecting from there. Of course, we came back up almost back to the entry and started rejecting again, and stronger bearish signatures on the pound, while euro is gaining a lot more strength than the pound. So one trade idea is obvious on my part. While we're here, let me label this the same way that I always label my structures, my illustrations, my charts, my levels of everything. So this is an H9 bearish order block. I prefer aligning it to the right, most of the time to the middle, but in this case I'll make it bottom. So my trade idea for pound is, firstly, let's drop down to the, actually staying on this chart, I'll be looking at this PDRA, this inversion fair value gap from the 3-hour chart. Again, the only reason I'm keeping this part in the video is to show how I label my PDRAs and levels, so I don't get confused on what time frame they might be coming from. So I'll be specifically looking at this level, and I'll even set an alert for it, because if we do successfully manage to take out yesterday's high, which was at the 9-hour order block, and we tap into this inversion on the 3-hour chart, then I'm definitely going to be taking the trade as yet another turtle soup, another Judas swing, if we manage to successfully get all the way up here. And that's still going to be inside of the 9-hour order block. It's not even at the mean threshold level yet of the order block, just yet another high to take price lower. So that's what I'll be looking at on the pound today, and paying attention to this long wick. Yesterday you can see that at the 50%, the consequent encroachment of this wick was also where the high of day was made. So that's why I'm saying with relatively strong conviction that we might not make a new high on the pound. We may, of course, go trade higher. We may take old PDRAs and respect them perfectly. We may take say this mitigation block here, which I've learned from Romeo, that most mitigation blocks can be lower time frame order blocks. So looking at this equal body highs on a lower time frame, you're likely to find that it's an order block residing in that area. And testing the theory, let's zoom down to the 30 minutes chart, 15, and even on the 15 you can already see there's an order block there. And then 5 minutes, definitely an order block with a fair value gap, entry and fall. So mitigation blocks on a higher time frame may mean other blocks on lower time frame. So I will be paying attention to these levels, to the H3 inversion, fair value gap, and any of these premium areas, measuring from yesterday's high to yesterday's low, premium being anywhere above the 50% mark. So I'll be looking at these levels while comparing the euro. Of course, if the euro was to reach any of the PDRAs I have already highlighted, then I'll be using that as my indicator, my indication, if you want to call it that, to be entering the pound. So of course I've already mentioned that I'm entering as soon as we take out yesterday's high, right? So if I see that we've swept yesterday's high and we're creating a little bit of a bearish signal to trade lower, that's when, regardless of where we are in price on the pound, as long as we are above the 50% mark of yesterday's range, then I'm likely to take the trade manually using a lower time frame PDRA to the downside. So that's what I'm looking for there. Invalidation points, I've already mentioned my invalidation points on euro, and my invalidation point on the pound is actually a lot wider because of the squeeze that we are creating right now. Moving to the daily chart, I set my stop loss at this massively bearish candlestick. I put my stop loss at the high of it, and yeah, I put my stop loss there because there aren't too many inefficiencies to work with. So I'm a bit on the edge about the possibilities of what the market makers may do. Also, we have this other block, these 3 consecutive bearish candlesticks, 1, 2, 3. The main threshold of it was this level, and last few weeks we tapped it and rejected from it for a little bit into this inefficiency, then started falling off from there. So I'm paying attention to the main threshold as well. We might get them during FOMC spiking price higher to this main threshold before falling off. So I put my stop loss where I find safer or safest, which is at this candlestick's high. What I didn't cover yesterday, that I'm going to cover today, the indices. So already you can see my chart is already painted with lipsticks. Let me first clear some from lower time frames. The only thing I wanted yesterday on Monday's trading day was, firstly, I wanted us to close. Okay, well, the first thing I said to my group is that I wanted a fair value gap to be created from yesterday, and we successfully did that. So from the low of Thursday's price to the high of Monday's price, we have an inefficiency there, in the form of a sell side imbalance, right? So we have this CB, which above it we have an order block, a daily order block, as we can see, because we have a closure below this candlestick. So this is an order block for me, a daily bearish order block. So I wanted to see a fair value gap with another block created in this area while we closed below this swing low. So last week closed with this swing low intact on Wednesday. So we have a low, and to the left of it a higher low. To the right of it we have a higher low. So this makes this a swing point, a swing low, right? But notice how we haven't closed below it yet. Yes, we traded below it on Friday and yesterday as well, but I wanted to see if yesterday we could close below this swing low. That would validate my market structure shift, which is why I put this line here with market structure shift on it. So I wanted to see if we could close below it. If we did that yesterday, that would have fortified my idea for the rest of the week, because that would make me want to confidently take this sell from this order block and sell side imbalance area, because it would, firstly, it's Tuesday today, creating the high of the week at this point would be ideal because it will be taking out yesterday's high. Secondly, we have a valid market structure shift with an order block and a fair value gap, so it has multiple PDRAs on a higher time frame for me to take it lower. And then thirdly, and most importantly, we have the quarterly theory from Day, which I'm probably gonna link in the description as well, but because he explains it better. But in my case, in Q1 we have X, in Q2 we have A, which is accumulation, which is why I believe we went higher as much as we did. So this to me is the high of the month, right? And then this, I expect this to be manipulation. So any high above the true opening is a valid manipulation to me, right? So if this is the accumulation, then this is manipulation, right? This whole phase should be manipulation, which is this whole week actually. And the true opening is of course this yellow mark where we have the true month opening, which we also dipped into yesterday, but I would have liked to see it happen today on a Tuesday at this other block. So if we can sweep this high from yesterday, tap into this area and fall off, I will prefer that, and I'll be more confident in it, especially when we can close below this swing low that I'm still looking at. So we've traded below it twice. I want to see a complete closure, so we'll pay attention, very close attention to S&P 500 to see if we can close bearish below this swing low, right? Of course I set my invalidation point there because I'm using an order block entry, so stop loss is above the order block. I'm targeting this sell side liquidity because it's an inefficiency on a higher time frame. I'm not going to show it here, but go into your charts, you will see on monthly, weekly and higher time frame that there is an inefficiency there, so an imbalance, I mean. And then the reason I'm taking the S&P 500 as my sell, the one I'm choosing to sell, is because of the SMT divergence between the two. So comparing S&P 500 with the Nasdaq, we can see from the from the 4th of August 2023 to the 1st of September 2023, we can see that here on the Nasdaq, on S&P 500, we failed to make a new high, but on Nasdaq, on NQ, we successfully made a new high. So for me, I would take this as a turtle soup to wipe out every and anyone that was holding their trades from this point, right? Those that entered their sells at this point and were profitable because of the entry using this fair value gap and this order block, right? So I believe them running up here was to run the stop losses for those that trailed their stop loss to break even, or to put it at this point to reduce their losses. While ES was basically indicating to us that we are still bearish overall and we should look for lower prices. So I was paying close attention to that, which is why I'm picking ES as the one to trade for the week. And I'm not really going to pour all my eggs in this basket here, even though, yes, we do have the same structure, a fair value gap. Yes, we do have an order block and everything, but we still don't have the market structure shift as well on this side. So I'm not going to bother myself too much on trying to trade the NQ. And I'll pay more attention to ES instead. And while we're here at true openings, we also have Monday's price, Monday's data being printed, as I mentioned at the beginning of the video. One thing that I like to have throughout the course of the week is the closing price at 6 p.m. On Monday, which is the opening price for the Asia range. So it's from there, opening. We label this as our true week opening. So this allows us, the same way that we take the midnight price as our equilibrium, when we trade below the midnight price, it's an indication that we are cheap for the day. If we trade above it, we are expensive for the day. We're in a premium, we're in a discount, right? So I look at the same with the true week opening that Day teaches. Again, I'll link his channel in the description and his Twitter as well. But yeah, so I will be paying attention to this true week opening throughout the course of the week. Of course, we have our true day openings, we have our true session openings and everything, but I'll be paying attention to this throughout the course of the week, especially from tomorrow, Wednesday, and Thursday as well. But yeah, if we do trade high to this point that I wanted, to the order block that I was mentioning, we would be above the true week opening, and we would also be above the true month opening, and will be in a high time frame PDRA, which would be the perfect, or one of the best confluences I can get to take price lower. And if I lose in the trade, I wasn't essentially wrong in my analysis, and I know I followed protocols the way I should have, and the market makers just had a different idea, a different plan. So that's what I'm looking for. That's exactly why I wanted to see us trade above the premium price for the day, which is this yellow line, the midnight price, premium price for the week, premium price for the month, and then finally in a high time frame PDRA. This would be the best trade entry for me, which is why I say I'll prefer to trade ES and pour all my eggs in it. Without making the video any longer, I believe I've covered everything I wanted to cover. I believe I've already shown where my trade ideas are, and yeah, I know I did cover a bit of Euro over the weekend, and I know I was saying I was looking for higher prices on Euro JPY because of interest rate differentials, and Euro GBP I was looking for sells, but was not confident in it because of the stronger euro over the weaker pound, and the interest rate suggesting that we might see higher prices in the euro. So it doesn't really make a lot of sense to be trading Euro GBP sells instead of buys. So I scrapped this whole idea and I'm not going to entertain it anymore. but I will be paying attention to USD CAD, because we have the CAD CPI coming out today during the New York Open, and we have this 9-day inversion fair value gap. 9-day inversion. It's almost like the weekly. I'm paying attention to how we trade into this. I still want to see higher prices because of the dollar index, so I'd like to see us trade into this and then see higher prices from there, and then probably just to take out this swing high, and I don't know what's going to happen from there. We might see lower prices because at this point the dollar might have reached the monthly sell side imbalance that we were targeting for so long. So at this point we may start seeing a rejection into the range, lower or even higher. But I'm paying very close attention to this level as CPI data gets released at 8:30 New York opening. So that's all I have for now. If you have any questions, of course, feel free to ask in the comment section. If you have any suggestions, if you have anything in particular you would like me to look at, also feel free to ask. Other than that, good luck and good trading.